My name is Jose Garcia. I'm the director of a company called Global Forestry Capital. We specialize in alternative investments, but predominantly we specialize in investment advisory within the sustainable forestry and timber industries. It's kind of nice to see that people are talking about alternative assets. I think that over the last couple of decades, we kind of forgot a little bit about what alternative assets were. Everybody's so busy with their futures and their long shorts and their equities and their covered calls and their fancy hedge fund money strategies that we forget that there are assets out there that people have been investing on, for hundreds or thousands of years that we kind of have fallen off the wayside. And I think it's time for investors are finally realizing that we need, in order to have a good investment portfolio, it needs to be well balanced, it needs to be diversified, and we can no longer ignore investment assets. I think it's important to note that investments can't be all about getting rich quick. A good balanced portfolio has short-term strategies, medium-term strategies, and long-term strategies. And one of the things that that we feel is a very good important part of any investment portfolio is forestry or timber, as a way to stabilize an investment portfolio's performance and as well as to minimize volatility. I'm going to speak a little bit about the forestry sector first and just give you some basic information about the asset class. It's important to know there's only really been three real commodities that have increased in value over 100 years. Okay, that's gold, oil, and timber. And for gold and oil, there are finite reserves. I can't speak any louder. I'm sorry. I wish I could. I can get a little closer to you. That's okay. So for gold and oil, there's a finite amount of gold and oil in the world. We know how many gold mines there are. We know how many oil reserves there are. Every once in a while, we can find an extra reserve. We can find a little bit more quantity, but they're finite reserves. For timber or forestry, we can manage the supply. We can plant more trees. We can create additional supply, which makes the asset class very interesting because not only do we have a growing demand, but we can also adjust supply to the demand and create a very viable, sustainable market where we're constantly creating new supply to meet demand. I thought, since the first speaker talked a lot about, past performances and correlations, I thought it'd be interesting to put this fact up, is that over the last 40 years, and that's 40 years, the S&P has returned approximately just under 10%. In an investment, if we would have put that money into a forestry portfolio, over the last 40 years, the investment return would have been 12%. So that gives you an idea of the power of timber and forestry as an asset class, that it's something that it's a lot more stable and has the potential of having a higher return than traditional equity markets. Here's something that I find very interesting, and many of you are probably sophisticated investors or business owners. In any business, you look for two things. You look for a need and a demand, or a need, demand, and an ability to supply that need or meet that demand. Well, in the forestry markets, we have a demand that is much higher than the supply of available timber assets. So in any market where you have a much higher demand and a lower supply, that's basically going to create an opportunity. It's going to put price pressure upwards on an asset. And that's really what we're experiencing right now in the forestry asset class. As you can see, in 2010, supply was approximately 20% lower than demand, and we expect that trend to follow and continue that demand supply gap to continue to increase into 2020. What does this mean for forestry? It means that wood or timber is getting more expensive. More people need it. More people want it. More people want more than what we have, and that always puts pressure on the prices. Some of the qualities of timber and forestry as an asset class, and this was covered very extensively in the first presentation, but obviously there's a very low degree of correlation between equity, fixed income, and forestry. To quote Warren Buffett, he says, "Trees grow no matter what. They don't read the Financial Times. So the stock market can go up, the stock market can go down, interest rates can go up. interest rates can go down, and trees just continue to grow and they continue to get bigger. And that's important as well, because in any well-diversified portfolio, you want to have a percentage of your portfolio that is completely uncorrelated from traditional equity, so that when you have stock market swings or interest rate movements, you don't necessarily that doesn't necessarily affect your whole portfolio. It's a hard, real asset. You are not investing in some fancy money strategy. You're not investing into some hedge fund. You're actually physically holding an asset that you can touch and that you can feel. And I think that's important as well, because a lot of people have really forgotten what it is to invest in real assets. It's important that you have that ability, and it also generates a much better absolute return. It's a hedge against inflation, and that's important. Many alternative assets are uncorrelated, but forestry is one of the few assets that is uncorrelated from traditional financial markets, but not uncorrelated from inflation. As inflation goes up, timber prices go up as well, and that's a very good quality of forestry as an asset class. And then last but not least, it's an ethical investment. We're not talking about cutting down the rainforest. We're not talking about deforesting, Southeast Asia. We're talking about sustainable forestry plantations. We're talking about setting up a tree plantation that's taking care of the environment, that is done in a sustainable and socially responsible way. And it's an ethical investment, and it's a very sustainable value proposition. No investments is without risks. So I'd like to spend a few moments just talking to you a little bit about the risks of forestry investments. Forestry investments are categorized as a very illiquid, long-term investment asset. So that's important to note. When I say lack of exit strategy, I mean that once you invest in a plantation, you have to see it through. You can't, it's very difficult to resell a plantation halfway through or whatnot. You basically have to wait until the harvest cycle is complete. You need to cut the tree down, and you need to sell the lumber. And that's one of the qualities of forestry. Lack of proven methodology. It's very important that if you look to invest in forestry, that you look for a forestry management company or a value proposition that has been in the market for a very long time. Most forestry projects are between 12 and 20 years. So you wouldn't want to invest in a project that has less than 10 years of track record, because that project really hasn't seen its full term. And then, lack of regulated onshore vehicles. I mean, there's a lot of offshore investments in forestry. There's a lot of unregulated vehicles. If you look to invest in forestry, you want to look to invest in a well-regulated, well-structured investment vehicle. Operational risk. These are three of the main risks that must be taken into account when looking at forestry as an asset class. The first one is natural risk. Soil quality, rain, drought, any kind of environmental factors that could affect a forestry plantation need to be taken in consideration. Number two is greenfield risk. The tree is not always a tree. It has to grow into a tree. So what we mean by greenfield risk is picking the land, finding the seedlings, and then going through that greenfield part of the process where the tree is still just a plant and growing into a tree. Once a tree has bark and it has wood, then it's a lot easier to manage. But if you're investing into a project that's at time zero, you're going to run additional operational and greenfield risk through that part of the project. And then manager risk. This is what I just mentioned before. You want to pick a forestry manager that has substantial experience. You don't want to invest in a project that is a 20-year project with a forestry manager that only has 4 years experience. You want to have somebody who's actually seen through the whole project and has substantial experience in order to manage the project rightly. And then, like we talked about before, liquidity risk. One of the benefits of forestry is that you get a nice uncorrelated return. One of the risks is that you have to give up some liquidity. Forestry assets you're not trading in the stock market, you're not trading in the futures market, you're physically buying and selling wood, and that requires time. So liquidity is one of the issues that you have to analyze. As an investor, you have to decide whether you want to go into a closed-end structure or an open-ended structure, and then you have to analyze the risk for each structure accordingly. You want to make sure that you are investing for the medium to long term. Forestry is not something that you invest for 1 or 2 or 3 years. It's generally something that you have to invest at least in the to 10-year category in order for it to be suitable for you as an investor. And you have to invest in a project that's diversified, and that's important. There's a lot of, you don't want to invest into a project that only has one plantation, because that's the same thing as putting all your eggs in one basket. You wouldn't go out and pick one stock and put all your money in one stock. You would want to build a well-diversified portfolio of forestry projects in order to stabilize and mitigate any standard deviation that you may see in your returns. These are some of the things that we recommend when you're looking at investment vehicles. We predominantly analyze vehicles that are fully regulated. So we work predominantly in Europe under Luxembourg law, which means that we work with funds that are regulated in Luxembourg, that have a number of qualities that are very important. Luxembourg funds today are regulated by the CSSF, which is a Luxembourg regulator, and by the Central European Bank through the Alternative Investment Fund Managers Directive. In addition, you can have open-ended structures or closed-end structures. If you have an open-ended structure, you want to make sure that the structure is producing cash flow in order for it to create liquidity. And then you want to make sure that all the service providers in any investment vehicle, not just in forestry, are independent, and that you have a certain level of transparency that makes you feel comfortable when you're performing your due diligence into the vehicle. Some of the interesting facts about forestry that people haven't seen before is that forestry plantations have different cash flows. Traditionally, in this part of the project is what we called before the greenfield risk. So at -1, this is when you actually pick your land and you plan your plantation. At time 0 here is when you actually put your seeds on the ground or your seedlings on the ground. And then at a certain point in time, the greenfield part of the project is over, which means that, from the year 3 on, we now have trees, okay, and the trees continue to grow. A plantation has several what we call thinnings or interfellings, points in time where you can actually create cash flows from your plantations. This is a traditional teak plantation in Brazil, where you basically have 3 points in time where you can actually generate cash flows of the plantation. So at year 7, year 13, and year 16, and then here at year 20 to 22 would be when you actually harvest the plantation. So it's important to note that when you invest in a forestry plantation, you have to know where in the cycle you are. If you're investing in this part of the cycle, not only are you running greenfield risk, but you're also very far away from getting your cash flows. If you're investing in this part of the cycle, then you are already investing in a plantation that's generating cash flow every few years, and that obviously is a lot easier to deal with investors that are more risk adverse. Some of the positive approach that we recommend our investors is basically, a forestry plantation a forestry investment vehicle should be something that's well diversified. It should be something where there's a good amount of risk management and liquidity management. You should work with forestry management companies that have a substantial track record, and you should work with a project that is well diversified and offers, cash flows on an annual basis. For example, this is a sample portfolio of plantations that actually provide annual cash flows. You can see there's a little bit of cash flow in the first 3 years here, but as you can see, from 2017 on, you have cash flows in the 3 to 5% rate, and then it goes up to 8%, and up here to 12%. That's basically what you're looking for in a forestry portfolio. You wouldn't want to have 0, 0, 0 cash flow and then everything in the back end, because that's basically like putting all your eggs in one basket. So you want to look at forestry portfolios that have well-diversified plantations that invest in a number of different projects, and then you have sort of a nice liquidity curve, or a nice set of cash flows that are coming out on an annual basis in order to minimize your volatility. Some of the important parts of the investment process is that you want to look at forestry projects that have direct investment. So you don't want to invest in a vehicle that has that owns a company that owns a plantation. You want to invest in a vehicle that physically owns the assets, like we talked about before. We're talking about a real asset. So you want to own the asset directly, and that's very, very important, because it's really what gets you that absolute return and that minimum correlation. You want to have a fair market price valuation. There are forestry auditing companies. There are companies that specialize on going out to plantations and reviewing the valuation of a plantation, looking at the cash flows, doing soil samples, doing wood tests, and coming up with independent valuation reports that express the value of those cash flows for that plantation. So if you look at forestry investments, you always want to ask for a fair market price valuation report that should be done by an independent valuation agent. That's very, very important, and it's very rarely available in the forestry world. There are, and then like we talked about before, there are intern thinning. So don't just look at the project and the final harvesting rate. You want to look at when is a plantation producing cash flows, and you want to factor those cash flows into your analysis. Social responsibility. I think it's important to note that sustainable forestry projects are not harming the environment. They are actually creating a better environment. We work predominantly only with what we call FSC certified, and you might have seen this sign in some of the paper goods or some of the woods that you buy today. It basically means that an FSC certified project means that it's been audited, certified, and reviewed by the Forest Stewardship Council, which means that the project does not harm the environment. So some of the facets that I can tell you from a practical perspective, a FSC certified project cannot deforest. So that means that before you actually plant a plantation, there must be less than 20% of trees in that land you plan to use. Any more than that, then you're officially deforesting, and that's not allowed under the FSC certification. In addition, you must submit the plans to your plantation to the FSC for approval, which means that you have to maintain a certain amount of wild reserve area for any animals in the land. And you also have to plan your plantation in a certain way that's sustainable. So when you actually harvest the trees, you basically have to be able to replant the exact same amount of trees in the land that you use. And in addition, there are other facets of the Forest Stewardship Council that you have to keep in mind, like social responsibility for your labor workers. So you can't, maltreat or not pay or have any kind of adverse labor situations. And one of the interesting facts about the FSC is that in today's world, most manufacturers that are manufacturing wood or timber products for North America, Europe, will only purchase FSC certified lumber from FSC certified projects. And that's important to note, because what NGOs and what international communities are doing is they're using the FSC certification to minimize the amount of deforestation and illegal logging that's going on in the world. So if you do look at a forestry investment, you want to look at FSC certified, because those are the ones that are going to grow the most. That's also the ones that are seeing the highest increase in demand for those products. And then there's also the Principles for Responsible Investment. This was a movement done by the United Nations, which basically holds investments, projects into forestry accountable for environmental, social, and corporate governance. So projects have to keep the environment in mind. They have to keep social responsibility issues like we talked about, the labor laws, the labor situations, and corporate governance, which means that they have to be accountable for the projects that they do, and they have to make sure that they are not only not harming the environment, but not harming any of the communities around their environment, and actually promoting social responsibility. And that's my presentation. Is there any, yes? Yeah. Basically, what I'm trying to do is I'm trying to give you the framework for which to analyze any prospective investment that you see in forestry. So if you look at a fund that's investing in forestry, number one, you want to make sure that they're being socially responsible. Okay. Number two, you want to make sure that they have a good liquidity management system in place, so that they know how the liquidity of the fund is evolving. And number three, that they're working with independent.
Mm-hmm. Which does all those things, right? You don't expect each one to go and learn all those things, but to find the right fund.
Yes, well, we manage certain forestry funds, and we specialize on analyzing forestry projects. So we do that in-house. Yes, absolutely. Does that answer your question?
Yes.
Okay. We manage a number of public funds in Luxembourg that invest in forestry and other sustainable projects. Okay, and for more information, you can speak to our authorized representative here in Israel.
You keep saying forestry. What type of trees are you currently investing in and why?
Well, we most of our investments in South America. We work predominantly in Brazil because of the fact that it's an investment grade country, has a very well developed forestry industry, and we tend to work more in hardwoods. We don't work so much on softwoods like pine and birch because softwoods have a lot of substitutes. You know, a lot of synthetic substitutes like plastic and other polymers. Hardwoods tend to have very few substitutes, which means that their demand is more inelastic. The price is higher, and when you have an inelastic demand, the price is more stable. And when you have a higher price, that means that production costs and shipping costs tend to be a lower percentage of your overall cost, which makes it even less correlated to traditional markets. Any other questions?